I see this as a very, very dangerous playground that we are approaching. So we have to play our cards right in this moment. It's not something that we can keep on procrastinating and people mentality say, okay, let's see what happens. No, we cannot have that kind of mentality anymore, because the people that plan these things already know what's going to happen, and they've told us to our faces we are going through this recalibration of the monetary system that goes through the great taking, and after the great taking there is going to be the great reset. So be very careful.
Wednesday, July 23rd, 2025, Monaco 64, home of alternative economics and contrarian views. Well, today I have a first interview with a brand new guest who actually happens to watch the channel. But Andrea Cecchi, he's a former Italian Air Force officer, former bank worker for 32 years, and he's now an honorary consul for the Bahamas, where he deals with trade, tourism, and real estate. He's written 2 books about gold, and all the revenue from the sales of those books are donated to charity in the Bahamas for the victims of the hurricane. I think that was a few years ago. So Andrea, excuse me, welcome to the channel.
Thank you very much, Mario. It's an honor, a great privilege, and I'm kind of feeling a little, like a pressure to perform well, because I know your channel is one of the best around. So for me, it's a great honor to be able to be your guest.
Well, I think from what you wrote, I don't think you have to worry about anything, because you worked for over 30 years in the banking sector. And what we're going to talk about today is the Federal Reserve and gold revaluation, but also the U.S. Treasury. And Andrea Cecchi, he wrote something on his Substack, which we'll look at. And basically, he's saying that the Treasury and the Fed are prepared to monetize gold, which would mean like a QE without the debt. But I won't go into details. I'll let Andrea do it. So I'm just going to share here what he wrote, and I'm going to put a link to it below in the description. And the other thing that Andrea said in the in his article is that we need to share this with as many people as possible, because it's really important what is going to happen, and it could affect your financial future. So here we go. Gold 40,000, and yeah, $40,000. So could you, I'll let you talk about it, and about this financial accounting manual that the Fed issued in May 2025. Yeah.
Yes, it's very interesting. When I think the first person that shared it was Luke Groman. Then was shared also by other people like us that look into these things. So like George Gammon, he picked it up also. And the key word here is accountancy, because it all starts with that double entry accountancy. In this case, we need two sides of the equation, the Fed and the Treasury, and by practicing this accountancy, they can make things happen. And in this newsletter, I break it down. I think in a way that it can be understood also by people that don't have that much experience in banking. I was in banking for 32 years. I saw what happens in banks when stuff happens. I saw people cry, people lose money, people lose also everything. So I started to research, especially after Lehman Brothers, the great financial crisis after 2008, when we saw how corrupt and filthy the banking system. It was everybody who has a heart saw how corrupt the system was, and one of them was me. So I started to research about how to best advise my customer, some of which were also my friend, on the best strategy to avoid another one of these disgusting shenanigans that the banks do to destroy the savings of people. So I started to research into gold. I wrote 2 books about gold. Of course, I quit. I resigned from the bank, and to be able to say these things with credibility, because I couldn't keep saying these things and keep working first, receiving a salary from the same institution that I was accusing. So, like, to be coherent, I quit, and now I'm free. I'm free to research this this material and share it with people so that they can understand how corrupt the system is and how to best position yourself to save the purchasing power of your savings in the best way possible in this moment, which is a very pivotal point. When Scott Bessent got in office, he said it in lay terms. We are going through a global monetary reordering. So there is no need to interpret what's going on. It's a global monetary reordering, and gold will be the protagonist. This manual from the Federal Reserve puts it into a practical way. What is a manual for? A manual is what we need to follow step by step to accomplish something. When I was in the bank, we would receive an email from the headquarters. Manuals are given to bank workers to teach them practically what they have to do to obtain a result. So in this case, in the presence of a manual that talks about gold monetization, we are not anymore in the field of hypothesis. It's something that is already being decided. So we'll see how it is going to play out. But since they are going to monetize gold, in my newsletter, I follow a pattern of thoughts that leads us to this monetization and an unavoidable step of revaluing gold, because since you have to monetize it, when you monetize it, the monetization, as I said before, is a double entry accountancy trick. The Treasury issues a gold certificate based on the alleged Fort Knox gold, but at this point, who cares if the gold is there or not? It's just perception. So the Treasury issues a gold certificate and discounts it at the Federal Reserve that can issue currency. Is nothing different from what the Federal Reserve has done so far by monetizing mortgage-backed security and other stuff, let's say.
Yeah,
for lack of a filthier word.
Can I just interrupt a second?
Sure.
It's interesting that they talk about this right in the beginning. It seems to me that
Exactly.
gold is very important, and it's the first entry also in the Fed's balance sheet. So you can see here, balance sheet, you got general, and then you go straight to gold certificates. Without gold, there is no Federal Reserve or no system.
No.
So I think we should make sure people realize how important this is. So could we go in detail a little bit about the numbers and the 40,000, how you came up with that, and what
actually
yeah.
is actually a hypothesis, but also in my book that I wrote, my book was published. I mean, it's in Italian. It was published for the Italian public. But there is an interview that the transcript of the interview that Jim Sinclair, rest his soul, gave to Greg Hunter just right after COVID, where he has some very probable prices of gold, because he's not somebody who picks up this number out of like out of a box. He's somebody, Jim Sinclair. He obtained the nickname of Mr. Gold because he was Mr. Gold. So and he has some interesting number how gold, according to his calculations, was going to be revalued. But 4,000, it's just a number there, because somebody else used it. Is not really something that I can place a bet on. It could be even more.
40,000, you mean? Yeah, yeah.
Yeah, 40,000. Even
Yeah.
Jim Sinclair used a much bigger number. So it could even be a conservative number, because let's see how. If you remember, and I'm sure you do, it's not the first time that gold gets revalued. It can be done. It was done by Roosevelt in 1933. So it's something that can be done, and the results of revaluing gold are extremely beneficial in times of a crisis. And it could be a very easy way to gain some time, especially in this very dire situation of the U.S. debt, U.S. deficit that are skyrocketing. So another interesting thing is how these trillions can be obtained by revaluing gold, and then put it's immediate liquidity. And we know that how bad U.S. needs immediate liquidity. So when the gold gets monetized, it has to be monetized at market value. So already there has to be a revaluation, because gold now is in the books for $42 something, the price that was fixed in 1973. So even if you monetize it at market value, which is the price of today, there must be, is unavoidable that there is a revaluation. But the occasion is too sweet. Like, since we have to revaluate, why not set up a higher price and obtain also enough liquidity to keep on going, to keep on kicking the can down the road. I think it's very probable. I know you've spoken about this also many times on your channel. We are on the threshold of seeing it happen, because we already have a manual issued. We're not in the hypothesis. We have a manual from the Federal Reserve itself, so it's not that we have to look into some other commentator that could be well informed or not. It's the Federal Reserve itself that tells us that gold is being monetized. So if it's going to be monetized, it has to be monetized at market value. Market value now is about $3,400 per ounce, but it could be a possibility that it gets revalued, just because it would provide the U.S. government with some oxygen that it desperately needs. And we saw it. These things we saw that it happened already, almost in the same situation. It was the Great Depression. Now we are in a situation almost like that. Not to get too deep in the U.S. economy. You've covered that with a great extent, and we all know how bad it is.
Well, back in 1973, they had revalued it the year before in 72 from 35 to 38, and then gold just kept rising. And then a year later, they revalued it to 42.22. And that year was when the dollar index was created. And I've looked at the price of gold back then. It was already going for like 100. So even if they revalue to the market price, let's say 3,500, which is near where we are, I think that would create a floor, right? Could you explain why it would create a floor for the gold price?
Well, if we think about what's going on, also according to Scott Bessent's own theory of a global monetary reordering, gold has to be the floor. You gotta have some, and there are some other commentators that, we need, the world needs some value to base its own, to understand the value of things, and the US dollars doesn't provide that idea of value anymore. So you need something that is fixed, something that is money, not make-believe. And gold has always represented that. I mean, the debt-based currency experiment can go on only for so long. But then, like as we've seen with Bretton Woods agreement, in the end, the gold is the equalizer. So 1 kilo of gold will always be 1 kilo of gold. It never really changes. Whereas the currency, which is the measure, fluctuates and until it expires. So this is the bottom line. Maybe the 3,500 is the bottom for now, but I don't see it. I see it as extremely cheap.
Yeah,
extremely cheap.
Also,
Because compared to the monstrosity of the toxic finance, I mean, a kilo of gold is not overinflated by tricks.
yeah, and could you talk about the I think at 15,000 there would be an extra 4 trillion. So at 30,000 that would be 8 trillion. So at your figure of 40,000, your speculative figure, it could add 10 trillion to the Fed's balance sheet, and that would be credited because the Fed would get the gold certificates from the Treasury, and then the Fed issues Federal Reserve notes and sends it to the I think they call it a gold certificate account at the Treasury. So the Treasury will have 10 trillion to play with. They, like you said, they could pay off some debt, or they could clear the, yeah, it would be a very good thing. But what would the consequence be for the average person that doesn't have any gold? And you talk about the inflation lag. Maybe you could explain that to the viewers.
Yes, thank you. The inflation lag is a concept that is very well explained by Steve Hanke, Professor Steve Hanke, who's often a guest of David Lynn. And it's inflation lag is something that exists. That is when currency is added into circulation, it doesn't immediately makes its appearance in like the cost of living. It has a period before it's released, before it starts getting into the spending habits of people. So the way this gold revaluation is going to be played out is very dangerous for those who don't have gold, and it's very dangerous for the people that will fall into the trap of selling the gold they have. They say, "Wow, now it's worth so much money. I'm sitting on such a beautiful gain. Let me sell my gold and get some currency in return." I mean, if that currency is needed for some necessary expenses, there's nothing wrong. But exchanging gold for currency is also always lead to disaster, because once you get this currency, you don't price in the inflation lag that hits in the future. So you're sitting on a bunch of paper currency that will depreciate. And as the laws of debt-based system, you see with accruing interest, the terminal phase is always it comes very fast, and it comes at the end. This is the trick on how they plan to confiscate the gold to those who still have some, because they will lure them into selling it into, it's going to be the government its own that it places a bid on the price of gold. They say, okay, sell it to me for this much. People say, wow, it's so much money, let me get it. And so far, I remember clearly how right after the great financial crisis that we all remember was in 2008, two things happened. One was the creation of all these sell gold, we buy gold shops. It was a global thing. So they spread like mushrooms. Families all ran there was a crisis, people needed money, or some people just to live a better life, or just were persuaded by those slogans: sell your gold. What do you need? Those old earrings from your grandmother in the drawer. Go sell it. All that stink gold you have in the house. And people obeyed. People do what the TV tells them to do. So everybody rushed and sold their gold into this uh, sort of pawn shops, or we buy gold shops. It was a global thing, and so in a way, families don't have any gold anymore. Some still do. Uh, Very few understand the enormity of this paradigm change, and so very few will be able to save themselves. And another thing was created right in the aftermath of the great financial crisis. The white paper of Bitcoin was published. So we had a banking crisis where all the banks practically went bust. They were saved by quantitative easing, by the bailouts. Immense amount of currency was pumped into the banks, and at the same time, gold was confiscated from family through this propaganda, and the crypto hype started to gain steam. This is all connected, and things don't happen overnight. The people that plan these things, they have a long range view, and technology wasn't ready at the time to be able to implement the Great Reset in 2008. Now technology is ready, and we see that this digital trap is getting more and more deadly. The word token itself is a deadly word. What is a token? Is a representative of something. So you'd rather have the something or the represent, like if you go wash your car, they give you a token. That's not money. It's just something you use, to put in the slot of the machine to obtain that service. So this tokenization plays hand in hand with this plan of monetizing gold and revaluing gold. People will give it up. Inflation will kick in. All the money that people have will be trapped into these digital apps, and I see this as a very very dangerous playground that we are approaching. So we have to play our cards right in this moment. It's not something that we can keep on procrastinating, and people mentality say, okay, let's see what happens. No, we cannot have that kind of mentality anymore, because the people that plan these things already know what's going to happen, and they've told us to our faces we are going through this recalibration of the monetary system that goes through the great taking, and after the great taking there is going to be the great reset. So be
Yeah.
very careful.
I guess if they were to revalue and monetize a lot of the gold in the Treasury with the Fed after the inflation lag, and it takes about what, 6 months to 18 months to kick in, the fiat dollar would become like worthless, and then that's when the reset would come, and they would and it looks like they're playing both sides of this, because the Trump administration is also pushing stable coins and crypto, so they want people to get into this digital prison,
Yeah,
and then
yeah,
when there's the reset, people are going to be trapped. And if you don't have any physical gold or silver outside the system, you're going to be dependent on this system. And what else I wanted to ask you? Oh, yeah. This morning, I've heard that the US and Japan were able to agree on a trade deal. And it was easier, I think, because the Japanese government is under pressure because they lost the majority in the upper house. So they agreed on 15% tariff. Uh, but my question is, what do you think all this trade negotiations, what do you think it's all about in the bigger scheme of things, including gold remonetization?
I think I mean, it's a difficult question to ask. It's very complex. The world is very complex because when it comes to trade, you know, it's an enormous thing. You know, like it has to happen in many countries with globalization. Is not anymore like in the Bretton Woods Agreement where you had a few players. Now every country in the world is player. So it's a very complicated thing. I think it's all in preparation, in setting the stage for the new monetary system. The BRICS are announced, you know, with the Project Ambridge, and the funny thing how they named their own currency. You know, they had the unit, like we starting back from one, like the Deutsche Mark after the hyperinflation of the Weimar Republic. You know, they took all the zeros, erased them, and that. So I think it's all in preparation, setting the stage for. But that's in my humble opinion for this recalibration of the world trade that has to happen with a solid base where everybody agrees, because you cannot suppose you are building a project that it takes 10 years to before you start to when you sell. You have to be able to price it in a currency that makes sense. If you are doing that and calculated in US dollar, and you see the country that has to pay you issuing currency by the trillions every few months, you know what kind of reality you can base your business plan. This alters all the possibility to have sensible pricing on things, because these currencies don't express value anymore. I live in Italy and the Bahamas, but in Italy we have the euro. I mean, since its inception, the euro has lost over 90% of its purchasing power towards gold. So euro is dying. Is a dead currency. If you see minus 90, that's it. It's the end. It's finished. So we are at the threshold of something enormous happening. This thing is going to happen now with this trade. I think it's probably set to accelerate the demise of the currency, and because I reason as a former bank worker, right? The request for something has to come from the customer, for the user. When you go to a bank and you apply for a loan, they make you sign it that you want it. It's your signature, and then the bank say, "Okay, since you ask, I will give it to you." That's the kind of mentality. So they have to set the stage for the people to want the new system, and then they will get it.
Yeah.
They will get it, and and there will be a lot of pain for those who don't have gold, especially who don't have stuff of value. They will find themselves with a bunch of worthless currency, and that's very sad, very sad.
Yeah, and what about the cryptocurrencies and Bitcoin? I think they will be worth something, but will they go up as much as gold in value relative to, let's say, goods and services?
Maybe. I think I just checked yesterday. There are like 17,000 cryptocurrencies in the world. For what concerns Bitcoin, I just finished reading this book. It's called Hijacking Bitcoin. Catherine Austin Fitz said to read it in her interview with the Jimmy Dore show. So I rushed and bought it, because if Catherine Austin Fitz tells you to read the book, you gotta read it. And it's very easy, as clear as then people can get their idea. I got my own. It's a project that was hijacked. There are people like De Castris, the Count De Castris, who is the CEO of AXA Insurance Group that run the show. Is the president of the Bilderberg Group. The developers from inside, they write the software of these things. This guy who wrote the book, Roger Ver, I think his name, and he said they used to call me the Bitcoin Jesus, because I was an advocate for Bitcoin. Now they call me the Bitcoin Judas, because I go telling that the project was hijacked. So it's very interesting read. Bottom line, it's something that fits in the project of taking control of people's assets, because it's all once they get people money and people property, everything gets digitalized, the stuff belongs to the people that control the software, the programmers.
Yeah, yeah,
I also spoke to a guy who told me he actually contacted me about finding a way to buy gold, but he sold his mining company. He had a big, huge mining apparatus, and yeah, I think it was 2019 or 2020, and he showed me the screenshot of the wire. It was 100 million euros received from Deutsche Bank that bought the whole thing. So banks are in it big time, and
yeah, and
I don't trust banks. I've been in them 32 years.
yeah,
I don't
yeah.
trust.
It's a shame because they should provide a good service, but yeah,
Mm,
I mean, with what happened in '08, I lost trust too.
yeah,
But with Bitcoin as well, I looked into Bitcoin back in 2011, and I thought this is great. We're
yeah,
gonna replace the old financial system, the corrupt banking system, with this new peer-to-peer system that's outside the system. But ever since 2017, I noticed that banks like Goldman Sachs were getting involved, and I thought, wow, they're coming after it. And
mm,
then they created like a futures contracts on the main exchanges, options, ETFs, and now it's like it's not I agree with Roger Ver, his name. Yeah, he is not a Judas. I think the community has been the Judas, and yeah, I think they're enticing people with the price, and I also think it could be like you said, a way to suck people's money before they reset everything. And I think it's sad. But one final question I wanted to ask you is about greed, because you said that will hurt a lot of people who have gold and I think silver as well. Could you explain what you mean by that?
yes, that is greed is something that I don't deal with. I don't deal with speculation. I buy gold as a father who plans to leave his gold to my future generation. It's money that you don't need to spend. You can't save it, so you have to find a way to maintain the purchasing value. Um, So this is not the kind of people I talk to, not speculators, people that trade gold. Just gold is something that you can hold and make sure that you have value. Gold makes sense, and then once you see that the powers that be don't want you to own gold, then maybe it's the time when you might think maybe I should have some, because the masters don't want the slave to own gold. So if gold is the money of freedom, the money of liberty.
Great. I think that's a good way to end it, Andrea. And it was great meeting you. And we organized this yesterday. So thank you for accepting my
No,
invitation.
thank you, Mario. You are an incredible gentleman. I really love your channel, and I say it again, it was a great honor to be interviewed by you.
Thank you. And I'll keep in touch.
Thank you. Thank you very much.